All right. Hi, everybody. I'm Bill Noble, and this is your market update. Let's start with the good news. The dollar is in trouble. Crypto doesn't trade very well, but the dollar trades worse. So I'm going to paint you a picture. I'm going to paint you a picture of like a DeFi summer and then a Bitcoin bust. All right. Now, more forecasting. I know, possible eye-rolling emojis, but I'm actually going out long-term, sticking my neck way out. So big picture, ETH looks way better than Bitcoin, no surprise. Huge DeFi rally starting late summer into September. Hopefully it starts July 4th, and I think that's going to be a 2-month, or 3-month altcoin super move. In the fourth quarter, there's going to be a problem. Equities or the dollar or inflation is a huge risk. You know, if the dollar goes down, that's great for crypto, but if it affects equities, it's not. 2022, I think there's risk of a black swan event. I'm going to cover that. There are other charts that show scary things after this year. And then the next massive to the moon and beyond, 2024 to 2025. Okay, coming back down to earth, let's do the tactical picture for Bitcoin. 34,800 looks like good GAN support. Everybody seems bearish. The price action on Saturday, honestly, could it have been worse? I sat in my chair on Saturday going, this looks like it's going to zero. People were cursing me off on Twitter for saying 2240-ish was support. Like they wanted to do the opposite of everything I said for the rest of my life. Normally, that's a bottom. Hopefully, it holds. Bitcoin could return to its 120-day moving average. That's the red line near 52K. Okay, ETH is holding its 120-day moving average around 2240 and a big GAN level at that point. I do see the possibility for ETH returning to 3,700. Now, the big question is why? Crypto YouTuber I saw was using this formation in another circumstance. It's called a diamond. This individual called it the blood diamond after the movie of that name. There's a diamond on the dollar monthly chart. The dollar is weakening. The dollar index is about to close or could close below its 120-month moving average. I think this portends for extreme downside in the dollar. Dollar index could fall from 90 to 80, and I think it could be worse than that and go to 70. Diamonds are called blood diamonds for a reason. They normally trigger very violent moves. Inflation in the United States is eating away at people's purchasing power. So skipping the whole economics lesson, it's bad for the dollar, which short term is great for crypto. A brief reminder of why we like crypto. This is the value of the dollar versus the Lebanese pound. So the higher this number is, the worse off people are in Lebanon. So $1 used to get you 2,000 pounds. Now $1 gets you 13,000 pounds. What does that mean? That means if you go out for an evening and you want to buy a hamburger and ice cream, you need a backpack full of Lebanese pounds. Okay? This, not to this extreme, hopefully, but something like this, some kind of scare could transpire in the dollar in the near term. Now, just in case everyone thinks the global pandemic is completely over, South Africa was locked down recently. Bloomberg, it was rumored to happen, and Zero Hedge confirmed it with a tweet. Now, I don't want to be all doom and gloom, but until this virus goes away, it hasn't gone away. Okay? People out there are suffering, and central banks know this, and are going to have to continue to print money irregardless of inflation. That's why I bring up the virus. Nobody is going to stop printing money with any country like South Africa on the ropes. Now, let's talk DeFi. I am so sick and tired of watching this market indiscriminately sell these DeFi coins. Meanwhile, I'm getting reports of like millions of dollars in Tether flooding into the market, people coming in from the outside, most likely looking for yield. I mean, sushi at $9 yesterday. Really? Seriously. It's at the bottom of a parallel channel, and it looks like the prelude to a much, much bigger up move. May 30th is 270 days. That's a Gann number from when sushi started trading. I'm guessing that there's going to be a DeFi bottom now. There's going to be an interruption in the trend on the 10th of June. And then I would expect for a slow, steady resumption of DeFi into the summer and a massive acceleration in August and September. Irregardless of whether that is right, sushi at 10, buy it or sell it. Now, let's do Fright Night. As you know, I'm an analyst. Forrest is both an analyst and a trader, but I'm more of kind of like the pure analyst type. Now, part of my job is to be both interesting and accurate. In situations like this, I'll have a cutting board. Some of the stuff is bullish. Some of the stuff is bearish. Today, I'm going to present work that I've seen elsewhere that's bearish. And it's bearish for Bitcoin. Now, I got tired of listening to Elon Musk beat up on Bitcoin, okay? And I felt like I needed to stick up for crypto, and I still do. And I hope every single thing that I'm about to tell you is dead wrong. Not to mention the fact that I'm putting this on YouTube right before BTC Miami. I'm not sure if my ticket's going to work after I get done talking. However, I am going to say these things because as a responsible analyst, you need to know both sides of the story. Because as a reader reminded me last week when I was being hard on myself, we're all adults and we're all making decisions. So I'm trying to help you any way I can by just showing you what I'm about to show you. Now, let's start with some comedy. I remember in December of 2017, there were a picture on the front page of the New York Times with people wearing crypto Christmas sweaters with the title, I'm sorry, everyone's getting ridiculously rich and you're not. Now, this is somewhat more subtle. Love that it's pro-crypto, but it just seems a little bit interesting that a decentralized entity is sponsoring a race car. It reeks of froth, and it could be a contrarian signal that perhaps crypto, particularly Bitcoin, is a bit, I don't know, shall we say, a little bit too in love with itself. Now, I'm going to bring this up because I saw this circulate in a chat room full of very, very smart people. And the analyst out there who's drawing this chart actually helped predict the top, so he's got the hot hand. And then I added some comedy along with it, even though it's not funny. So in Bitcoin, you can draw a head and shoulders top formation. Now, for anybody who doesn't know about charts, what's a head and shoulders top? Well, it's 3 attempts by bulls to take the market higher, right? First attempt doesn't quite make it. Then they get the big thrust. That's 64K, okay? Yes. Okay, and then back down. And then that third time, they're like, okay, I'm sick of the bears, blank you, we're taking it up. And if it stalls, okay, the bulls go, oh no, the bears have control, the bears attack, and there's a huge move lower. Now, in this particular case, the top of the shoulder could be 40K. I personally think you could see 50K because of the dollar. Either way, the target of this head and shoulders pattern is effectively 0. Technically, it's negative 5,000, which means that something could happen with Bitcoin, probably with the blockchain, where you would actually have to pay someone to take your Bitcoin. Now, I know that's totally absurd. Don't blow up in the comments. Just remember, oil went negative. You were paying someone to take your oil at one point. Now, I don't think Bitcoin is going negative, and I don't think Bitcoin is going to 0, but this chart is being circulated. Now, let's talk cycles. I've been getting into time as a way to help people deal with this bear market or bull market, or shall I rephrase, figure out whether or not this is a bull market or a bear market. So since this is the end of the month of May 2021, I want to talk about cycle analysis. Gann used to work on a 44-month cycle, or 1,385 days. Now, I just applied this to the history of Bitcoin. So on TradingView, the best I could get was Poloniex, I believe. No, Bitfinex, that went back and started in 2013. So I took 2013 and I just projected out 44 months. And I said, okay, what do I see? Well, I see that there was a huge rally at the start of the cycle. Bitcoin went from 200 to 1,100. 9 months into the cycle, it topped and it went straight down and didn't bottom until 30 months into the cycle. So it didn't bottom until late 2015. Then it chopped around and actually started to rally and didn't actually really take off and get going until November of 2016. So let's describe the pattern. Moon, crash, chop, rally. Okay. Now let's go to the next group of 44 bars. Let's start at November 2016 and stretch it out to July of 2020. And what do I find? 13 months into the cycle, Bitcoin goes to 20K and then collapses. 25 months into the cycle, remember the last one was 29, Bitcoin bottoms out. Bitcoin chops around between 13 and 4K, slices and dices everyone to pieces before it takes off again. Okay? So up quick, crash, sit, chop. Present day, starting in July 2020. Guess what? Bitcoin topped out after 9 months. So it was 9, 13, and 9 now. So up for 9 months. Now, if the prior 2 cycles are accurate, don't blow up in the comments, don't go crazy. But if this is true, if history repeats itself, there's something wrong with Bitcoin. Because that means 30 bars into the cycle would be the end of 2022. So that means after Bitcoin gets done with its last rally, okay, which is either going to end at 40K or 42K, realistically, Bitcoin's got 15 months of pain or 15 months of chop or a crash like in all the other instances. Okay, 2023 to 24 is chop, and the monster rally would probably start in 2024 and 2025. I got a lot of evidence that those would be marquee mega years. Now, I'm telling you this because I don't want to make you upset, but I am telling you that if this turns out to be the case in crypto, I remember during the bear market where it was a one altcoin market, it was Matic. And the next cycle could be stuff like, it could be ETH, Matic, and Helium. Simple as that, right? You could have 4 or 5 coins that survive, but there's going to be a problem with Bitcoin. I'm sure there are going to be alt seasons along the way. I don't want to be totally grim because, again, crypto can get slammed. 2022 looks awful, right? But that doesn't mean there can't be alt seasons along the way. And DeFi is not dead. And DeFi is going to take off, in my opinion, August and September for sure, not investment advice. Now, I just told you all that, and you're like, oh my God, Bill, you're scaring me. Okay, now let me help you out. So let's say you want to hodl crypto. You say, I'm not getting out of crypto. I need protection from inflation. I gotta hodl. Or I just got wrecked in coins I like, and I'm not selling. There's no point. Okay, either way, it's fine. I have one of those. So it happened to everybody. Now, gold, okay? In any of the scenarios I described, it's time for gold. Dollar down, gold up. Stocks down, gold up. Inflation, gold way up, way up. Okay? Gold bottomed in 2000 at $300. Okay? No one wanted it. I think I got an 18-karat school ring, giant school ring from University of Texas for like $800. Nobody wanted gold. And then over the next 10 years, gold 6x'd in crypto terms. Now, what is gold if it's 6x's again? 14,000. There's a teacup and handle formation, and I know this is an easy sell to a crypto audience. Is anyone going to tell me that something that's hot can't 6x? I mean, on our show, if you're going to talk to Ian Bellina, you can't even talk to him unless you've had a 25x because of Matic and Helium, right? So saying that gold could 6x and go to 14,000 to a crypto audience, what's the big deal? So you got to get PAX or some sort of gold futures or GLD, not investment advice, into a portfolio if you want to hodl crypto through whatever is going to happen next. All right. Are you still hearing me out there?
Yep. Yes. Yeah.
Okay. All right. So QQQ, NASDAQ 100, the FANG stocks, my favorite, not. Okay. Noticing QQQ topping out at a big GAN line. Noticing it's hitting a big fib extension line. I don't like this. I don't like inflation. I don't like the fact for equities, crypto frequently moves first. Crypto moved last time in 2017 before a bond market debacle, before interest rates rose. And I think the same thing could happen, except this time it's not bonds, it's stocks. Okay, now, this is SQQQ. It is a leveraged short instrument. These things are dangerous. They are volatile, not investment advice at all. But when you have a leveraged device like this, okay, that's designed to go up if the market goes down, obviously, since QQQ has done nothing but go up in the prior slide, this triple leverage short ETF, which, by the way, is dangerous, not investment advice, probably not for anybody over 40. That's what we used to tell people at Schwab, psychologically, okay? But for a crypto audience, this thing trades at 11, okay? Support is at 0, okay? And the upside is 300. So if you were levered short stocks, if something happened to Bitcoin or Ether, you could have explosive gains because this thing could go to like 300 because it's 3x leverage. So it uses options inside the ETF, right? Just like you have leverage with, crypto exchanges. It's sort of the equity market's way of doing something similar. It's not the same thing, but the bottom line is this. If you wanted to hodl crypto and you're sick of this thing going down all the time and you're worried, and there's 2 trades that haven't even started yet, right? Like you're not going to find an affordable Ethereum put option after this huge down move. So you got to go to another market to hedge. Those other markets are equities and gold, not investment advice. And that, friends, is the market update.
All right. Thank you, Bill. So if you enjoyed that market update, please smash the like buttons, destroy that like button, and share this video with the crypto family. Let them know what's going to happen in crypto next.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.